Hi there. How to stop bad financial decisions. Many times, it's not that we do not know why we make bad financial choices, but how should we stop the bad financial decisions that we make even when we know better? Welcome to GJAMES Associate Channel, where we provide you with financial and accounting education. In finance, we talk about investment decisions, we talk about financing decisions, and we talk about distributing of dividend decisions. Any of our finance must fall into these categories of talk. Now we want to talk about how to stop financial decisions that are bad. Under what category can we categorize this? Let us hear from you. So let's pick it one after the other, beginning from now. Not having a budget. Many times we think that this only applies to women. No, many times even men, we buy at impulse. We call it impulse buying, right? Not having a budget is a critical issue when we are talking about bad decisions about our spending. Then let's look at saving too much. Saving too much is as bad as saving too little because both must be prioritized. We must know why we are actually saving. So saving too little or saving too much or keeping too much cash, they are both bad. Let's take for example, if you save too little, you will not get to your saving objectives on time, right? And that is bad. If you keep too much cash, inflation will catch up with you, and equally is bad because there must be time value of money. So those are bad choices that many times we all are fall or are still falling into these traps of financial habits, refusing to stick to your budget even though you have it. You do not stick to it. You believe that, okay, I can pamper myself a bit with this. Little by little, you see that the investment, the saving is already depleted, and it is a bad financial habit. Not creating an emergency fund. It is important for me to let you know that it is good that you have ahead of time and in your saving at least 6 months salary, equivalent of your 6 months salary that you should have in your saving. That is in case of emergency. If anything happen, if you are laid off in your job, if you are sick, if member of your family is sick and it demands your time and you have to quit your job, if you have a business idea you want to run through and you know that you can do better than being on salary or unemployment, what you basically need to do is to fall back on the savings that you have. But what of if you do not have? That is why many times people get stuck in doing the jobs they don't like. There's nothing bad in doing jobs rather than work, but let our job finance our work. That is what you actually want to do and you enjoy doing. When you are doing what you do not enjoy doing, ensure that is feeding on what you want to do and you enjoy doing in life, and if probably the rest of your life. Forgetting about your insurance, especially in some climes and some parts of the world, we put everything on God. God is our insurance. Why God is our insurance? I dare not neglect that God is the ultimate insurance. It is important, and God even expects of us to do what we can do and be in charge of our own life. What God usually will do for us are things that we cannot do by ourselves. It's just like somebody waiting that God will come down to come and cut or mourn his grass outside his or her building. No, as much as God is loving, God is not going to do that for you because he has given you capacity to do that. I hope we understand about the insurance. So let us move on and talk about another bad decision that we do make, which is about taxation. Many times we believe that our government is not doing anything or they are not that accountable to us about what they are using our taxes for, but it is prudent to pay our taxes because whether we like it or not, it's going to catch up with us in the nearest future. And by that time, maybe we are cash trap of cash flow. So it's good that we pay our taxes on time and forget about it. Not letting your emotion rule your investment decision is another way of getting out of your bad financial decision. Let's take for example, you want to buy a stock and you are buying that stock just because your friend or your cousin or your in-law is working there. There was a story that I recently heard in which somebody bought stock because the company was not doing fine and he has his family member in the organization. Please, what does that emotion has to do with the investment decision? It has nothing to do. Once the organization is down, the family member will be laid off, of course, and also the investment is gone. It is rational to have done otherwise. Maybe probably ensure that the family member is more well catered for through the investment he had rather made, rather than putting the money in the organization in which even the family member does not have control over. I hope I brought clarity to that. Also, investing in risky assets. Investing in risky assets. Anyway, we have to expatiate more on that because what may be risky to you may not be risky to me. So we need to have so what is risky to you may not be risky to me. So you have to know your risk level. What can you afford? And if at the end of the day, the investment wasn't doing well, it's not going to be an issue to you. You need to know it. You need to know your threshold. Also, you need to leverage the future to pay for today. Leveraging the future to pay for today. How are we going to do that? Many of us are already doing this knowingly or unknowingly. By the time we borrow on things we do not need to pay to get what we do not like. So we are already leveraging or borrowing, using our future to do what we want to do today. And it's just like a future contract. What is a future contract? A future contract is an agreement between a buyer or a seller or a supplier of service or labor and the like, and the person that needs it, that ensures that the money may be paid now, or we agree on the price of what we want to buy or sell in the nearest future. Now, take for example, you want to buy, let's say, a crude oil from me, and as a country, I have crude oil on my soil. So you say, okay, Gbenga, I'm going to buy your crude oil for the next 10 years. And we know the crude oil market, it fluctuates. But you know what? I'm going to buy it at $100, irrespective of what the rate will be as at that time. I'm buying the next 10 years now for $100. So that contract It's a future contract. So it has leveraged the future to pay for today. And many countries in the nation all over the world get choked by using this method of financing and the like. And it's get us stuck many times when we cannot live as we are now in our ability. Now, let's talk about spending on wants and not need, and how to get out of bad financing decision is to spend on our needs and spend less on our wants. So what do we want? We want a big lifestyle. We want to be known. We want to be famous. We want to ride uh, ex- luxurious cars and the like. What is our need? As against luxurious cars, we need mobility. That is to be able to be taken from one point to the other. That is basically what we need, irrespective of how good looking the car is, how expensive it is or not. Once it can take us there, that is our need. Our want is we want it to be classic. So when we go classical and neglect what our pocket is telling us as a now, we are spending on our wants and not on our need. This is G. James Associate channel. My name is Gbenga Olatunji FC here. This actually relates to the practical aspect of strategic financial management. Now we talk about personal finance, we talk about individual finance, we talk about corporate finance in a practical way. Wouldn't you like to subscribe to G James Associates channel? Click subscription, like, comments. Please share all over. Share on WhatsApp, share. You can share, and like the video. Please don't forget to like the video from G James Associates. We pride ourselves that we are value to life. We are value to your businesses.